Hi, this is Jeff Weber. I write a monthly newsletter about automatic investment management, investing, or AIM investing. And I would like to share with you on this video what exactly is in my newsletter and how you can easily get a free one-year subscription to my newsletter along with a free copy of my book. So I've enjoyed writing this newsletter for about 25 years. It's changed in format a few times, but it still contains very useful information on AIM investing. And I think you will find that you will enjoy reading the newsletter and you will profit from the newsletter. So, okay, I put in a book review every month. I think we all need to keep our investing knowledge growing. So I offer you books and give you a quick summary of the book, and you can see if you think it's a good book for you to read. And here's the picture of that book. Okay, my partner Brett does a wonderful job making this newsletter look good every month. Here's my contact information. You always feel free to contact me. Again, we try and make the thing interesting with a few graphics and things, because man does not live by print alone. So we want to help you navigate towards a better financial future for you and your family. That's the whole purpose of why I do this. Again, I put in a disclaimer. I'm not a licensed registered agent. I am merely giving you educational advice. And so, caveat emptor. Okay, now I'll just go through the portfolios. You'll see the same ones every month. You'll see my favorite is the Dogs of the Dow Leaps, or long-term options, because they are the safest stocks and they still make very high returns. You can see they're up 339% in the last 4.5 years. The next portfolio is my original one, started in 1993. It still has the same 10 stocks, and after 25 years, 15,000 has grown to 154,000, and this portfolio of only stocks is up 928%. So AIM does work long term. And I love to compare, why should you use Leaps instead of stocks? Look at the Dogs of the Dow stocks portfolio. It is only up 54%, whereas the Leaps portfolio is up 339%. So I think that's pretty clear why you want to use Leaps instead of stocks, because you can make much higher returns and the risk level is the same. This is a portfolio I started in August of 2006, so it's been around for 12 years. This is one. The beauty of AIM is you can own the same Leaps forever, merely by rolling them over every year into next year's Leap, so they will never expire. Just to give you an idea, look at Amazon here. Granted, most of us can't afford a contract on Amazon that's $53,000, but if you could, you'd see 132,000 has grown to over 3 million in 12 years. Not bad. So this portfolio is up almost 600% in 12 years. Again, I put this in here to prove to you AIM works long term. And then a little cheaper is out of the money Leaps. All out of the money means is the strike price is a little higher than the stock price. So at the time with Amazon, the stock price was less than $1,350. I keep the same Leaps all year, regardless of whether they go in the money. So I guarantee you'd be happy with Amazon, either in the money or out of the money. When you look and see you're up 13,000%, that's not too shabby. Another great feature, if you want to go outside the box a little bit, every month I look through Barron's and I find about 40 stocks, and I tell you whether they have Leaps or not. And then if you want to, you can look these up and see if they might fit your investing pattern. So every month you'll see new ones in here that I put in and show you, the high, low, and whether they have Leaps. I do that for both the New York Stock Exchange and for the over-the-counter or NASDAQ exchange, because there's many good stocks on both. This was a rich man's portfolio I put together. I was just curious how the FANGs would do, which basically means Facebook, Apple, Netflix, Google, and they're doing pretty spectacular. In 2.5 years, Amazon is up 437%, Facebook 153%, PayPal 342%. Overall, you're up 164% in 2.5 years. So if you have several $1 million, have I got a name portfolio for you? Okay. And then here for people who are a little more, you know, earthly, I say, here are some cheaper stocks that are out of the money. So the leaps are not that expensive. And again, you can see in roughly 2 years, this portfolio is up 100%. So I think I'm trying to prove to you, AIM works in many different ways, and it always works to bring you very high profits, much higher than many conventional investments. So again, I repeat, I'm not a licensed investing advisor, so I give you education. You see a beautiful image of my book that Brett was kind enough to create, and click on that if you want to order that book. So I think we finally, you know, come to the bottom line, so eloquently stated by Sir John Templeton when I was a mere 9 years old. And he said, to buy when others are despondently selling and to sell when others are avidly buying requires the greatest fortitude and pays the greatest ultimate rewards. Now, I don't think Sir John knew about AIM, but this is exactly the system he would be talking about that this applies to. And so I end with a beautiful picture of me in my nice little convertible Mercedes that Brett was nice enough to take. And all you have to do is go to jjjinvesting.com and send me your email address, and I will get the book, the newsletter, and several other free bonuses to you as quickly as possible. Remember, the first year is free, and you get a free copy of my book. So all you have to do, again, is go to jjjinvesting.com and say you'd like the free book and newsletter, and you will be very happy you did. Your family will be very happy you did, and your grandkids will be very happy you did, because this is a method of investing you can do for your lifetime, their lifetime, and many future generations' lifetimes. So I hope you've enjoyed this. I love doing these and look forward to our next video very soon. Thank you very much.